Now we'll move into our first panel discussion, exploring data collaboration, cases of open finance, cross-border lending, and the role of digital assets. The session will be moderated by Anubhav Nair from Silence Laboratories and features a fantastic lineups of experts. Pavle Avramovic from Cambridge Center for Alternative Finance. Christopher Nogi, Liberac and SMU. Saurabh Bhattacharya from ACE SG and Proxterra. And Alexander Kretsch from Glyph. They'll discuss how privacy-preserving technologies and open standards are reshaping financial data ecosystems. Please welcome our moderator and panelists on the stage.
So, afternoon, everyone. And yeah, welcome to all of you. I think a number of you have flown in from different parts of the world, and some familiar faces also over here. Really exciting topic today. Really talking about seeing how we could drive data collaboration and take it from a lot of familiar pilots that have been happening in different markets, and seeing how actual true scale can be attained. It's a very, very diverse panel that we have over here. So maybe if over just quick couple of lines, I'll just let you all self-introduce yourself, and then we can take it from there. Start with you, Alex.
Good morning, afternoon. Alexandre Rukesh, CEO of the Global Legal Entity Identifier Foundation. So the foundation is in charge of a global systems for identification of legal entities, LEIs, heavily used in regulatory and compliance around capital market, more and more in cross-border payments and digital assets, and also supply chain. The objective is to know who you're dealing with and who owns who as well. So the hierarchy of companies and who are children of parent companies.
My name is Pavle Avramovic. I work at the Cambridge Center for Alternative Finance. We're a research center at University of Cambridge, and we focus on the kind of regulation and technology interaction. And we do a lot of work on open banking, open finance, and some other areas. I used to work at the Financial Conduct Authority, so the UK regulator, so coming at this more from kind of a regulatory lens, but I'm sure we're going to have an exciting discussion.
I've got two now. Good afternoon, everyone. I'm Shaurav. I run a company called Proxterra, which was born out of the initiative by MAS and IMDA, the regulators over here, to help with SMEs going cross-border for trade. We worked in Africa, in countries like Ghana and Rwanda, to enable SMEs getting access to cross-border trade financing, and that's where maybe we'll be focusing on in this discussion as well. Thank you.
Hi everyone, my name is Chris Noy. I'm the Chief Strategy and Business Officer for Libera. We're a wholly owned tokenization platform for Standard Chartered. Been in this space for like the last decade or two from a fintech and blockchain perspective. So was previously based in the UK for over a decade. Looked at worked with the folks in VLEI. Also sort of worked across sort of the academia space. But really largely coming from a banking perspective, from an adoption perspective, what people look at, and actually, is how do you actually integrate some of these solutions into the actual workflows for financial systems?
Perfect, and I think the diversity allows us to sort of cover pretty much the whole chain, right from starting and understanding from a policy perspective to understanding how identity guardrails can be built. A couple of use cases specifically within the SME space, and I guess rounding it up with the right kind of incentives, specifically through digital assets at your end, Chris. So let me kickstart with a couple of numbers that I have over here, so just literally reading it off. But I'll throw this off to you, Pavle. In the UK alone, we have close to 13.5 million active users who have adopted open finance. And I say the word adopted open finance because while there is good momentum around it, but there are so many, there's still a lot of skepticism around it. So I guess the first question to you would be that, what's the most misunderstood metric in open finance specifically? And just from a policy perspective, how should people align around that?
I mean, the one you quoted could be the most misunderstood. No, but jokes aside, I think the big question in terms of open banking, so we looked at kind of over 95 countries trying to compare their adoption levels, and we're now doing a next piece of research which looks at 3 aspects. So incentives, liabilities, and key performance indicators. Each one of those 3 are probably the most misunderstood, and there's no consistency at a global level. So there's no consistency in terms of the commercial incentive structures. Very often we hear the same complaints from regulators. How do I incentivize my incumbents, but then the incumbents won't engage with me? Very difficult. Similarly, the liability model is very difficult. How do we ensure there's right grievance redressals? How do we ensure the consumer is aware? I think there's a massive issue with genuine consumer awareness. What does that even mean? I think they did probably not a great job with the branding. Open, is it really open? Am I sharing my data? I think there's concerns. And then your last question, what is a good metric? KPIs, we've done over 30 interviews now in the last month, and I've re-listened to a few of them. No one really has the right answers, right? Because the real market penetration isn't the data and the amount of data that's being shared, but regulators are taking very kind of read or read-write. They're taking quite slow approaches or sector by sector. Usually Brazil is kind of thought of as a good exemplar because kind of they manage to open up different data sets in different sectors at the same time. So you really need to go for that kind of stronger, broader approach versus this kind of sporadic, because you won't achieve that kind of scale that you want. But I do think with a bit of the movement we're seeing in a few different markets, kind of Thailand's done a lot of work, New Zealand now, there's momentum in Canada. But I do think everyone's looking at each other's shoulders like, who's a success story? So I don't think to your question, what's the metric? I don't think we have an answer. This paper is going to be published next year, so maybe we'll have some initial answers. But I do think there's this consumer awareness and understanding. And the second side is the actual scale of data, right? That's kind of being shared across not just retail payments and banking, which is the usual, but trying to look at, the usual credit field. And to your point on SMEs, that's the use case we're receiving the most interest in. How can you actually think about kind of API structures for SME finance to kind of address the usual credit data gap the SMEs face? So I think almost we might see a switch in terms of consumers might be too difficult. Can we focus a bit more on SMEs? But yeah, it's not an easy one.
Can I jump in here? I thought you will be leading by saying open was the biggest mistruth. So open banking or finance, from what I have seen, and I'm not a finance person, an entrepreneur for the last 20 years. So interact with a lot of finance, but not a finance professional like some of you are. In many ways, it's shades of gray. It's not really binary, it's open or not. But what we also see is a difference between what is consumer as well as what is business, what you brought to light as well about SMEs. And that's got to do with the regulation domains as well. Now, Singapore is very different. We have all the tools and proper regulations for data protection. But if you go to Africa as an example, out of the 55, 56 countries, 54 actually, the data protection commissions are quite varied. In some cases, to work with privacy-sensitive data, you need to be locally incorporated. That's to aid the regulation aspect, obviously. And hence, taking SME data out of the country, out of the sovereign land becomes quite difficult. And that is where the problem lies, and which is where privacy-preserving computing is something that could really, really help, because the data never leaves the country, but yet you get the computation out of it.
Can I add on as well? Because I actually think about sort of in terms of like metrics around the open banking side of things, and the FSG and security and privacy. So some of my sort of reflections in trying to implement some of this is you assume that everyone wants security and privacy, but actually, what you end up finding is what's really desirable for a lot of individuals and businesses is convenience. And that's actually, a driving force from a commercial perspective. And that's where a lot of the budget and a lot of the funding and a lot of the conversations go to, because there's a lot of high inertia in the sort of general day-to-day workflow. And unless you make that 10x simpler, 10x faster, 10x cheaper, it's actually quite hard to convince the incumbents, coming back to the earlier point, to move towards a different model.
Yeah, I want to park that, because I think that deserves another sort of a deeper discussion, but just want to get you in, Alex, over here. We know that open finance, in a way, depends a lot on verifiable actors and not just accessing data, right? So how are you thinking from your perspective when it comes to LEI and implementing those across the infrastructure? What are some of the challenges that you've also seen? And what would it take to drive faster adoption within, specifically from an identity perspective?
We're talking about privacy. I think for businesses, privacy is less of a problem, because if you want to do business with domestically or cross-border, you have to be transparent about who you are, and you have to prove that you exist as an entity. And that's often the challenge that SMEs have in Africa or in Southeast Asia or Latin America is, I want to trade cross-border with someone in Europe or someone next door. I'm in Brazil and I want to be able to trade with an Argentinian company. How does it even know that I exist as a provider of service? Am I a scammer or am I real? So the verifiability of the existence of the company is already something that is a barrier, and that we're trying to break with the with a global system like the LEI, which enables when a company has an LEI, it's a proof that that company exists, because you cannot get an LEI if you're not verified as an entity. So that's the first thing. I guess when we go digital, it becomes even more complicated, because everything I just explained is analog. You go on a database, you see an identifier, you trust that the person you have in front of you is effectively behind that identifier, when it could not be. It could be someone pretending to be a company. So especially on digital infrastructures. So now how do you make that verifiable? You make it verifiable leveraging technologies like decentralized identity and verifiable credentials. And that's what we've built on top of the LEI system. It's called the VLEI, Verifiable Legal Entity Identifier, which enables not only companies to prove who they are on digital platforms, blockchain or internet or whatever platforms, it's cross-chain and cross-platform, but also people acting on behalf of companies. In the world of businesses, businesses don't sign contract, businesses don't pay another company. People at or systems at companies do that on behalf of the company. So that's delegation of authority. The challenge we have in today's digital world is that delegation of authority is very difficult to prove, because existing digital certificates or credentials only target one individual or one entity, but never the two together. So entity plus individual plus role of that individual at the entity. And that's what the VLEI enables, is that proof at entity level and verifiable proof at actors in the company and even clients potentially as well. So so that's that's the challenge we're seeing. So first, proving you exist, which is the first thing. And second, when you've proved you exist, how do you prove it at the transaction level by verifiable credentials to enable that transaction to go through AML more easily, CFT more easily, and other types of compliance requirements.
It makes a lot of sense. And I'll go back to the question in terms of, or rather the point about how we can actually drive commercial outcomes. So I'm curious to know that, there's always a discussion, how do you actually price this entire ecosystem? Is it a function of output? Is it a function of signals? Is it a function of raw data, which is often also sometimes the case? But just love to get everyone's perspective. I think I can clearly say everyone's itching for this one. But I think also to understand, like, if there's aspects of tokenization, et cetera, that can come in. Sure, maybe you want to start.
Yeah, so mine might be a bit more qualitative, I would say. So first, Alex brings a very good, important point, building on the view of consumers separated from businesses. And actually, the best system out there, if anybody here runs businesses, owns businesses, is actually COPPAS and SingPass working together in Singapore. It is the best way to align the role of the individual with respect to the organization, everything being verified at its core.
But it only works in Singapore.
Of course, and we don't have that. I mean, we've not seen a similar system elsewhere. There's, of course, aggregator frameworks in India. China has a lot of data, which, of course, stays in China, and everybody else has something else in between, or maybe close to zero, not anything at all, actually. So again, financing does not exist without trade. Trade is the basics. And trade has different economics in different places, commodities, different versions of it have different economics aligned to it. So the cost has to fit into whatever is the profit of that particular trade. The moment that goes out of whack, it becomes a problem. I'll give you an example, and perhaps Alex may not like this, but we are believers in LEI as well at Proxtera. And it works for larger organizations. We've got ourselves the LEI done. Sorry, I'm just taking this example for example's sake. And it cost us about $200 to get it done. Now, in SMEs, of course, we didn't look for the cheapest price or anything like that, and we were
Starts
verified.
at $40.
Yeah, but we paid a third party for around that kind of money. Now, when we take it to Africa, $200 is not something an SME will spend. So it has to be value driven to that particular SME's trade. As an example, we did free literacy programs with verifiable credentials for the SME as the first digital credential for them. And we gave it away free. So we worked with sponsors to pay for the dollar cost or the $5 cost that we had on the certifications. They didn't take it unless they had the utility value for it. So what is it that they will get out of that certification? We, of course, tied it up with financing, and that's how we got them there. But everything in terms of the pricing of the technology or the verifications and everything else that comes in between has to tie into the kind of trade that is being worked on and what are the profit economics of that. Without that, they will just find a simpler way, the easiest way the water flows.
Yeah, I mean, Pablo, probably your thoughts in terms of maybe it's not a case of one size fits all, right? Like depending on different types of markets from the experience which Saurav was saying. So what is your perspective seeing a few different other
Yeah, I
markets?
think one of the interesting one, we just had a workshop, I can't name the regulator, but they kind of told us this kind of the story of the strong lobbyist incumbents, and they were like, okay, our idea, let's do some kind of economic analysis and say, this is the minimum you can charge the fintechs for the data, right? I was like, okay, that's an interesting thought experiment. We worked with it. We did find it was very hard, right, to do that kind of economic, to try to do the analysis. So I do think that kind of pricing data route, which was probably provoked by the whole JP Morgan announcement of like, we'll start charging everyone for the data. I think that was quite tricky, and that will be very kind of context specific. So I do think there's an element of, I don't know, I feel the engagement again between the regulators and others. I feel open banking, open finance is in a bit of a, not negative way, in a rut, right? No one's sure, no one wants to make a bit of the move and bet. And I think, I did mention Thailand already, but the Your Data initiative where they're trying to kind of integrate it with the broader digital identity framework, with the broader data sharing engagements, is quite a proactive way. And I think the other aspect is that kind of economic growth, foreign investment, right? Trying to demonstrate that this ecosystem is trying to do a bit of a more innovative way to share data. So I think we've seen not that many examples of a successful kind of data pricing model. Some countries might go for it, but it is very difficult. But I do think that kind of market signaling, and what we see especially is regulators market signaling particular sectors. It's very hard for regulators to kind of say we care about all financial sectors. We think there'll be probably movement in some countries, okay, we're really good at insurance, we're really good at credit, we're really good in these specific areas, because I think that signaling and is a bit missing, especially from the perspective of the private sector, right? Because they won't move until they see full commitment from government and regulators. This is something I can sustainably invest, not until the next government or next CEO, but I need a 5+ year plan. You know, our research showed there's like 11 countries with 5-year open finance roadmaps, but will they actually deliver on those roadmaps? Will it just be a roadmap that keeps slipping?
Chris, any perspective from your side?
Yeah. Okay. So I don't know if you guys ever heard of the design thinking framework. But I think it's kind of a nice starting base on how I think about this space. So generally, like the thinking is, you know, when I think about any ideas or applications of our technology, I usually sort of run it through, is it feasible? Is it technically feasible to sort of implement it? Is it viable? Will people pay for it? And is it desirable? Do people actually want it? I think the last two is, you know, within this specific base, you know, a lot of effort and time is usually spent on the feasibility, which is the technical implementation, the research. You know, there's a lot of great work that we saw earlier this morning on, you know, the various encryptions that is possible. But I think the viability as well as the desirability are those that, you know, need to sort of a bit more refinement and contextual. So I'll give you sort of two examples, right? I think how we think about it within the open banking space is probably a little bit different from how we think about it from a digital asset space. Because within the digital asset ecosystem, it's significantly more transparent than the current traditional financial rails. So as a result, within the sort of crypto/digital asset ecosystem, there's a significant higher demand for privacy because the rails itself is significantly more transparent at a network level. So as a result, when you start to think about things like security and privacy, you see significant more demand on that side of the leg. And we're seeing that today. I think we spoke about Singapore. Even from a DID and VC perspective, we actually have SingPass and CorpPass for like the higher confidential type data. But actually Singapore's also exploring SingVC, right? Which is the verifiable credentials version of what they think about identity, but for lower risk use cases. So, these are the type of things, that's very experimentally driven. But I think, it happens a lot more in the digital asset space and a lot higher demand. Now, within the sort of traditional finance sphere, and I think, the JPM is a great example, actually, because we're also seeing a shift in the conversation on that, where a lot of the banks, if you think about it, their moat is data. So it makes it doesn't make a lot of sense for them to say that, look, I'm giving away this data for free. So, I think when you think about, them charging for, the use of the JPM data, I think that's actually a natural sort of evolution because, previously it was regulatorily driven, but now it's at a point where they're like, look, actually I should be able to monetize this because, when I think about all of the data sets that I have versus all of the sort of data sets that's in the public domain, I have significantly more intel on my customers. So it's just food for thought when you think about, the applications of this. There's obviously a lot of experimentation that needs to happen, but when we start to think about, do people actually want this and are people willing to pay for it? These are questions I think is worth asking.
But is the data that they have on the consumers belongs to them or to the consumer?
That's a million-dollar question.
I mean, the same way that we're getting interest rate on, well, very little, but interest rate on our deposits, maybe we should have interest rates on our data deposits at banks.
And to add to this, I mean, similarly, it all originates as a competition measure. The majority of countries in the world, right? They have the big 5, big 7, big 9. They're sitting on all this data nice and comfortable. And now is the regulator trying to kind of shake them up, right? Okay, share this data, as Alex rightly says, that is kind of not really yours, and try to open it up. But it is very difficult to force the incumbents to move, right?
Actually, that's where open banking implemented correctly has to have the value. But that's very far away, even now, even in Singapore today.
But I would still love to push all of you, and if I was to literally ask you to put your hand, I guess one by one, on where you would prioritize, driving these commercial outcomes, where would it be?
Not me first, please. You need to think.
I mean, we make money tokenizing assets. So obviously, the tokenization of financial instruments in a Web3 format is where we're going to sort of put a lot of effort. But I can tell you that we just crossed the 1 billion mark last week. We are getting questions from our clients today. How is our data sort of being managed? And I don't want everyone knowing how much I own in my wallet. So these are the type of questions that are like bubbling up, because I think as and when you're going to start to see more transactions via stablecoins or CBDCs or tokenized deposits in conjunction with the asset side, there's going to be quite a fair bit of concern around, look, who's actually going to be seeing my data. I think there's an excellent sort of points that a lot of speakers make earlier this morning. It is a concern, especially in networks that are very, very transparent.
Yeah, obviously not a straight answer, but our core purpose is to help SMEs, and they are difficult to help because they come in various sizes and shapes in different countries. And keeping to their profitability economics is where we will have to maximize our commercialization. But it's a long journey.
I mean, this is a good question. We spoke a lot about this. I think first step is getting the consumer demand. So big push to Alex's point, actually making people excited about us, making them demand this. Second is that political top-down buy-in, which often misses, especially we often see from ministries of finance, right? The regulators talking about competition, Minister of Finance doesn't care about competition. And then the thirdly is the regulatory legislative push that can actually move the incumbents. So you kind of are striking from three sides. You're striking it top-down, from the demand side, and then from a regulatory side. But I think all those three things need to be done at the same time. And we only see a few markets that are managing to do that, but I still find the consumer gap really kind of surprising, that no one still really understands, oh yeah, I consented to that, or why do I keep getting this notification every 90 days? Sure, whatever happens. They don't really understand what is happening.
I guess I understand why I have trouble answering question immediately, because we are non-for-profits. Our objective is always to reduce actually the price of getting an LEI. The data is publicly available for free already. So our commercialization model around business identification and business reference data, in our view, should be a public good, a protocol, a standards that can be implemented by anybody for commercialization reasons. But that's why I always say identity, especially for businesses, it needs to be a standard and a protocol play, not a platform commercial play. Otherwise, you exclude SMEs, you exclude various players who are not going to be able to pay for their data to be exposed if they want their data to be exposed.
So I think that makes sense. I mean, kind of recapping everything that we've talked about data movement happening. We've talked about potentially driving some commercial outcomes. I guess the last part which I want to touch upon is, so who do we trust when it comes to this data, right? It's a great opportune moment to discuss that, because today also the prior discussions, and we've seen a number of use cases where pet technologies or these privacy technologies come in play to essentially solve where multiple parties can talk to each other without the raw data actually getting exposed, which obviously drives tremendous value. When we've seen a number of countries, I mean, India is an example where FIUs today are ingesting plain text data, right, which has practically everything, there. And therefore, really, if you're looking at it from ensuring that there is this mass adoption to ensure data trust is protected across the entire value chain. Alex, maybe starting off with you, you mentioned that let's not necessarily only keep the commercial outcome over here, which is fine. But I guess, let me put it a bit differently, that pets, specifically MPC, etc., are they actually regulator ready today to drive adoption? And again, I say adoption at scale, not necessarily pilots.
When we're talking about, especially when you look at blockchain and digital assets, when we talk about scaling of digital assets, I'll always like to quote, and I did it this morning at a breakfast roundtable, Larry Fink from the CEO of BlackRock, who is known for saying everything will be tokenized, ETFs, equities, blah, 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 blah. And everybody stops there. But if you look down his quote, it says, and it will be only scalable if we solve the critical problem of identity verification. Because why do you need identity verification for regulated assets on blockchains? Because of compliance, as simply as that. And we discussed this morning that there are ways of bringing compliance on chain in a way that is secure and not visible to everybody. But I think there will be a need to change dramatically how we dealing with compliance, including what the regulator wants. If you look at the travel rule, for example, which requires every sender of money to have to provide their customer information and the customer information of the receiver of the money in every transaction they do, how private is that? It's done for AML, CFT screening purposes, but it's so against other principles like privacy, when today there are ways of dealing with those issues without having to reveal the identity of the person. So I think we're going to have to move away from identity revealed and identity data revealed way of doing compliance to verifiable credential ways of doing where you only, when you look at attestations proving that something has been done, like KYC, proving that this customer is an accredited investor, proving that he's over 18, proving it is not a US citizen, because that's a criteria in banking, as we know. And those proofs should be sufficient to perform transactions without having even to know who that person or that entity is behind and all those credentials should be attached to wallets and to every potentially to every transactions per transactions to enable that true scaling of this amazing real-time 24/7 infrastructure that blockchain could enable in the future.
I mean, Chris, would love to get your thoughts. You talked about tokenized assets, right? Let's talk about tokenized funds over here from the same perspective. Where do you see a stronger or a potential immediate deployment of bets coming in? Do you see it maybe in protecting investors, or protecting maybe the NAV values? There was a mention earlier about that also. Any initial thoughts, or were you actually seeing some real-time deployment?
I'm going to be a bit controversial here, and I'm going to say that I think in the short term, you probably are not going to see much deployment. And it's just a simple matter of, I don't think a lot of folks fully can wrap their heads around the details of some of the encryption sort of techniques that's being presented and some of the sort of evolving nature of this. And that's kind of the reality, especially when you start to think about the deployments from an incumbent's perspective. Let me just give you a sort of fun, example. We were sort of, having conversations with risk committees in the banking side from the technology risk committees. And they were actually asking the question on how many Ethereum licenses I should be getting. Like, that is one of the most bizarre questions I've gotten from the risk committees. So, like, can you imagine, if I go to these risk committees and talk about FHE, like, this would go right over their heads, right? They would have no idea what I'm talking about. So, I think it's really important to also contextualize that, very often some of the things that we're speaking here is super cutting edge. It's really, really, really cutting edge. And I think, it solves quite a lot of really interesting problems, but I think it almost need to drag the whole population with us along this journey, and there's a lot of education that needs to happen before, this becomes wide scale adopted.
So a lot of theory moving to practicality.
That's correct, yeah. Sorry, yeah.
Go ahead.
But there's hope. And I think I just want to highlight that we're seeing a lot of interest in privacy and security right now because of AI. Because AI has significantly changed the dynamics of the conversation we're getting right now. So there's huge amounts of information across the internet, across all the AI agents bots here is dealing with. People are like, look, I don't know what I'm doing with my sort of data and privacy, and these are the type of things that's bubbling up. And the moment there's a lot more demand from people feeling at risk, that's kind of the point where there's demand.
I felt we nearly reached the end of the panel without the word AI being used, but appreciate it.
Actually, what we need is, I totally agree with him. I'll talk a bit more about it, but we need an iPhone moment or a ChatGPT moment for these technologies to be adopted. And in a similar vein, we've had those conversations with the risk committees in certain African countries' banks, and privacy-preserving computing is going to be difficult to explain. It's not like the smart people don't exist, but they're not in the same room for that discussion, right? So, which is why we did a collab with Silence Labs, and we are in the finals for the G20 tech sprint to demonstrate the privacy-preserving computing aspect of cross-border trade data exchange. Again, totally agree with Alex. We don't need privacy for that because SMEs will actually do anything to get their financing, anything. But the problem is the data rests with the banks, which are regulated, and they have their own privacy issues. So to comply with all of that, PPC is a way forward. But I really fret over explaining it to people, especially at banks. It's not about Singapore or India or China or Southeast Asia, which is quite forward, but in Africa, it's quite difficult.
I think, there's an interesting kind of analogy. So back in 2019, the FCA, we organized a tech sprint on these privacy enhancing tech. Nigel was there. So that's 6 years ago, right? We tried to kind of push for the use of these technology. Over time, what we found, it was that legal conversion, legal translation that was missing. people were telling us, I'll just pay someone to do 500 pages of a data sharing agreement. I don't know what the hell you were talking about. But then you had similar momentum from the Data Protection, the Information Commissioner's Office, who kind of pushed out, I think, 2 bits of guidance to try to outline these technologies, but we still didn't get to a stage where it says, this is super safe, right? The regulator will say, this is verified, this is the right technology, because it's the usual technology agnostic, technology neutral argument. But I think there's a ceiling of awareness and understanding we're probably hitting, but now it's that kind of follow-up step, which is the actually kind of the legal side. Actually, if I'm using this and I'm trying to do this project, what does that mean? A bunch of lawyers will just kind of say, I don't understand what's K-privacy, whatever it is. So I think there's, 6 years in now, it's still a bit of a challenge. I think we're seeing some smaller pilots. The technology's progressed as well in the meantime, but I do think it's that kind of legal understanding, because you won't get the full-fledged stamp of approval. But I think that kind of legal conversion is where it could be interesting, and with a lot of the kind of DLT, tokenization movement, you might get a bit of that, because they are getting more technical. But I do think it's not to obsess over a full understanding, but more around that kind of legal clarity.
Well, I think uncontrolled usage will actually push towards adoption in the sense, what do I mean by that? The blockchain and crypto phenomenon led to the banking sector and the market infrastructure sector rethinking their business model and the future of their business model. Stablecoins, heavily used today, could be this actually this iPhone moment for that. It's already used, despite the fact that it's not fully regulated, it's not completely according to what the regulators would want it to be, but it doesn't matter. It's being used. So I think it's kind of a catch-up, but the catch-up will lead towards acceptance of try and fail type of approach, where you implement something and then you realize it works, and then you don't have enough privacy, so you add encryption on top of it, and then maybe it's too much privacy, so you evolve it to be accessible by regulator, etc., but in a step-by-step approach. It's not an overnight. It's not going to happen overnight.
Makes a lot of sense. So I think reducing controls, finding that iPhone moment, ensuring that we can drive probably theory into more practice would drive it towards mainstream adoption. And I think we kind of gone a full circle today in our discussion, because really the starting point was like, how do we drive this towards commercialization, right, rather than the various successful pilots. But extremely interesting discussion. I know that I've been getting a few prompts that we're out of time, but look, thank you so much, all 4 of you. Really appreciate it. A round of applause for them, please. Thank you.
Thanks, Anubhav.